Hello, everybody. The one time I didn't check the other camera and it failed. Complex setup here. Anyway, thank you all for making it back. Tough, tricky one today. We're going to look at probably the most important discipline in investing, trading, etc. And that is about profit taking. All the aspects, risk management, emotions, discipline, decision making. We're going to talk about the psychology of all that too. Also the risks of holding, which are quite deadly as well. What else? We're going to talk about all the top questions from the week. Bots, pairs, Tesla killers, S-curves, leverage ETFs, pair trading, all the things that are top of your mind. So thank you all for coming. Thank you as well to the mods in the chat and everybody else. Let's go. And of course, this is not financial advice. All the questions come from Patreon. Thank you so much. We're going to go fast, try catch up, so I don't want to waste your time. Very first question, which I've been answering for 2 days. There's a lot to this. A lot. Probably this is the most important answer to a question this year for you all. So pay attention. And by the way, somebody asked me a question yesterday regarding something I covered in a video about a month ago. Make sure you watch all these videos because I will not waste your time. And there is a ton of learning in every single video. So first one is from, hi James, from Maniacal FF. I have a position in GraniteShares 3x long MicroStrategy, which is nearly 80%, 52,000 euros in loss. I just got my credit line of 50K, which I want to spend wisely to get out of this ugly position. What would you do in this situation? I'm stuck for 5 months now. And big thank you and cheers from the Balkans. So thank you so much, Maniacal. And as you know from my posts, I share my allocations every week, all my trades. So that should give you a good structure. But I'm going to focus much more on the critical issue here, which goes into a big part of what is a problem. And again, the answer to this question is chock full of nuggets that anybody who is in the markets needs to know. All right. So first of all, this is your situation and it's alarming. I wasn't even aware of 3LMI. That's the ticker, by the way. Just over the past year, MicroStrategy is up 600%. 3LMI is down 57%. How is that even possible? You're buying something that's 3x leverage MicroStrategy. Logic would tell you you should be up 1,800%, not down 60%. What's the problem? Let's jump into it. First of all, this is what eats you alive. This is the 3LMI Euro, 3LMI USD, etc., LMI3 in British pounds. It is a 3x leverage factor on MicroStrategy. The daily ongoing cost is 0.09795%. But remember, leveraged ETFs are rebalanced daily to maintain their leverage ratio, such as 2x or 3x or 2.5x, whatever it may be. And this daily rebalancing leads to a compounding effect known as volatility decay, which erodes value over time, and especially in volatile markets, especially with volatile assets like MicroStrategy. Additionally, leverage ETFs incur high fees due to costs associated with maintaining leverage, such as interest expenses, frequent rebalancing, which can significantly reduce the net returns and make them extremely unappealing for investors. This is what happened. This is why I hammer home rules all the time that you need to listen to. But this is a good time to learn as well. So who here in the audience, and answer me honestly, have you ever bought an asset? You've watched it go up like a rocket and you felt like a god, but then you did not take profit and you watched it go all the way down, not only to your cost basis, but way beyond. Okay? Drop a comment if you have, and if you have a scary story. Because this is what we need to learn. This is why things like stop losses, risk management, and profit taking are critical in this game. Again, the underlying goes up 600% and your position goes down 60%. You can't make this stuff up, folks. This is a nightmare scenario. This is why, unfortunately, our friend in the Balkans has lost 52,000 euros. So, first of all, We're going to introduce a little bit of data science, and we're going to spend some time on this because it is the most important thing. Buying a stock, investing is not important. This is the most important thing. And a shout out to my development team. I've been hammering them now for 3 years on this. We cracked the code a few months back after so much trial and effort and you name it. But not only did we crack the code, but we also plugged it and coded it into TradingView, which is really cool. So this is 3LMI on the new profit-taking model. If you had this model, it would have taken you from when you got in and you watched all the gains that you made, especially in March, April. You are making crazy money. This puppy went up huge. We saw, if we blow it up here, 3LMI went from approximately $30 straight up to nearly $1,200, which is not dissimilar to what MicroStrategy did way back in 2021. If you were around for that, I certainly was. Now, this is part of the discipline too, is to be able to get out. So we turn on our profit-taking model, and it does a couple of things. One, it identifies optimal layers. Okay, in this particular instance, we're only, the profit taker is activated at level 5 onwards, and it also optimizes how much you sell at which layer, and then it shows you how many units you've sold. This assumes, by the way, you have 1,000 shares approximately, so I took a ballpark about kind of what you've lost. Just say 1,000 shares. I think you had more than 1,000 shares, but I don't know the exact number. It shows you the amount that you sell, the amount that you hold per layer, the value you sold, the value you hold, the total sold, the total balance, the opportunity cost, and the cumulative expected value. And it does this in a couple of cool ways. But before we get into how this works, which is very important, we're going to talk about this. So profit taking is like poker, right? Good poker players are very good at profit taking. They're very good at playing with the table's money. You always hear me saying that play with the table's money. That's what I did with craps for a long time. And I played poker as well. I used to play online poker like a maniac in the 90s. But decision-making under uncertainty is what investors are bad at. Both stock market investing and poker players involve making decisions without complete information. And investors must make financial decisions based on limited data about companies and market conditions, while poker players must make decisions on incomplete knowledge of the opponent's hand, their cards, and future draws. Now, this is where risk management comes in. Both activities require effective risk management strategies. In poker, you must decide when to bet, call, or fold. Fold in investing is when you sell, okay, based on odds of potential outcomes. And investors must decide when to buy, hold, or sell, just like poker. So if you have a hard time understanding profit taking, think of poker. The other thing that's so important too is an emotional control. Success in poker and success in investing depends on the ability to control your emotions and avoid impulsive decisions. This emotional discipline is crucial, not only to avoid hasty decisions, but also to make sure you make decisions. Again, the hardest human emotion is to let go, to sell. Got to hammer that home again and again. So let's break down this model and why it's so important. First of all, this model is on, imagine you got in the beginning of 2024 on 3LMI, you're down, whatever, 60%. But the profit-taking model optimizes profit-taking in layers, and we're going to break it down with a money position. So imagine you bought in at 40, now it's at 30. You bought 1,000 shares, it cost you $40,000. During the year so far in 2024, by the way, that's the cost base of January 2024. We're only in just August. So 8 months into the year, it's not even a full year, but you would have gotten out. We'll talk more about time series as well in a minute and how it's important. But here are the layers. The very first layer, layer number 5, you sell 2%. Layer 6, 1.7%. Then layer 7, 39.3%. Layer 8, 33.6%. Layer 9, 28.1%. And then layer 10, 22.8%. And you can see all the other data there. The most important thing, though, is these decisions of how much to sell at what layer is a function of many different factors. The history of the asset, the volatility of the asset, where we expect the asset to go based on history and future factors and market signals, also timeframes, also your cost basis, also your risk tolerance. All of these are factors that go into this model and help you optimize profit taking. So let's look at the actual result of this. So imagine you would have sold across 6 layers, most sold at layer 7, then 8, and of the 1,000 shares, you would have sold 79% already. Then it went down. Now, this is important too, because if you take an asset like Bitcoin, imagine you've got a whole coin, yeah, you might want to take some profit. You might want to do it aggressively or conservatively or in a neutral manner, but you never want to sell all your Bitcoin. And this is the way this thing is geared. So instead of selling our 1,000 shares, we only sold 80% of them, okay? Now you can change the settings to sell more or less, but that'll come later. And instead of holding and losing 60%, you would have made 1,161% on the trade, because this would optimize your discipline around expected values and layers to take profits. And the ROI for the model itself for 1 year is over 80,000% on this one trade. This is why it's so important. Now, I put together a very crude visual, which I shared on Patreon before too, as to how it works. And then we'll get into the actual bell curve of exactly this profit taking for this particular trade. This here, we assign, for example, a probability of Bitcoin hitting a certain amount of price with a certain probability within a certain time frame. That a time frame is normally a year or so. So there's a 50% chance of hitting $100,000 in this bull run over the next 365 days. This is important because one can easily use this model to analyze longer or shorter time frames by changing the assumptions. So for example, if you want to build a probability of Bitcoin going to $100,000, but you have 10 years, that's going to be a 99% probability with a 1% chance it'll go to zero. But it's the time frame is what matters. The other thing that's important to note is layers too. How many times have you held an asset, you've seen it go to an all-time high and then mean revert? All right, we saw Bitcoin go to 74,000, fall below 50,000. Now it's on its way back up again. Wouldn't it be cool if you could sell at 74, buy back at 50? You add 50% to your bag. Solana's even more extreme. It went above 200, fell all the way down to like 111, and then worked its way back up. So playing that volatility is also key. So not only can you take profits, but you can layer back in if you're still in the bull run too. But this here shows you how we assign probabilities, how we calculate expected values, and how we modify the bell curve based on your risk profile and your cost basis. I hope that's clear. Now, this is the actual bell curve for that trade out there. If you were using the model in the Balkans, 3 LMI, this is what selling $497,780 looks like versus losing 80%. Okay, this is the curve. It's not as pretty as this curve, but this is the real calculations based on what happened. So you can see that layer 7, layer 6 took out the biggest chunks. And instead of watching all your money go up and down here, you took $500,000 off the table from your $40,000 investment. So that's the bell curve. And you'll hear me hear a lot of people talk about bell curves all the time, but that's exactly how it is. Now, maybe if the asset didn't hit a certain level or Bitcoin or whatever it is, MicroStrategy, it applies to all assets. Now, 1 in 100 or 1 in 1,000 may just go up forever, but that's very rare. Very, very rare indeed. Everything mean reverts pretty much. And a warning to you and a warning to everybody. I always stress this. Never hold a leverage ETF or a perp for more than 10 to 30 days. You want to get in right before a big move. Let's go back to the chart here. You can see very clearly that big blue parabolic move. That's when you can hold it. Once the trend turns, you get out and you take profits on the way up every step of the way. And we spent years optimizing this. Second hardest thing ever to build after PTOS. No, optimized trend. That was the biggest bear. So everybody remember, do not hold these leverage things. And sorry for taking so long to hammer this home, but this is going to be so important in this bull run. And the next thing we have coming up is the rotation model, which is when you take profit, do you hold it in dollars or do you move it into another asset? That's going to be another hard nut to crack, but that's it. And then we're done. Then hopefully the rest of my life I'm done with building models. And please, out there in the Balkans, thank you so much for the question. Watch what we do. Do not go back into this thing. Now, there would be a scenario where maybe you would play this, but even when I look and analyze this chart, you can get little bumps, but I don't know, something happened with how they managed this 3LMI product. Even when MicroStrategy fell down to like $1,100, shot back to nearly 2,000, and then right back down to $1,100. Now it's 150 after the split. I mean, this is weird indeed. Weird indeed. So just be careful out there with leverage stuff. They're not designed to be held long term. I hope that's clear. Thank you for the question. Next question is from Crypto Craig. Hey, James, would you consider making a video where you walk us through your process of fundamental analysis? Of course. And it would be great to see what tools you use to assess a company and how you distinguish between the good and the bad. So I've got all of that. I made a very detailed video over 3 years ago. This video I'm showing today will have more views in 2 hours than this video I made 3 years ago to date. Because nobody wants to learn about how to pick stocks. They want people to pick them for themselves. They don't want to learn how to fish for themselves. So I've been spending an inordinate amount of my life analyzing markets, identifying winners early, getting in hard. That's my whole MO for everything. This is my list of how to pick stocks, and the video will add here after the fact. You'll find the link, but it's a stock picking checklist of 18 items. And I'll run through it real quick. You watch the video yourself. If you really want to get into the nitty gritty, first of all, you pick your space. So what I mean by space, I also mean narrative. So my narratives are crypto and AI. That's it. The only two things I invest in. Crypto and AI, and a whole bunch of proxies tied to those things. So that's the space. You want to be in the space early before it takes off. If you're watching this channel in 2022, you heard about my big pivot to AI. At one stage, all the stocks that I held were all AI based. They were the Googles, the Metas, the Nvidias, the Teslas, etc., as well as crypto stuff. Then you have to understand the space. You can't invest in a space if you don't understand the space. So, for example, it's also very important to know your limitations. I don't understand biotech, therefore I don't touch it. All right, I'll leave that up to people like ARK Invest to do what they can there. But it's also super risky. I always say biotech for me is riskier than crypto, which is the riskiest thing. So make sure you understand the space. Make sure you study the space. So critical. You know, understand the dynamics, the trends, where we are in the life cycle, etc. Do in-depth research, etc. Then there's a key piece here. I call it identify the disruption tipping point. Determine when things are really going to tip over. For example, EVs, we're there now already, but you got to be able to see that it's coming at some stage. And there's so much more that is coming too. Then you find the leader who's going to win the space. Make sure they have a moat, that is an advantage that other people can't get over. It could be like a vertical integration moat. It could be an engineering excellent moat. It could be a supply chain moat, etc. And evaluate the company's commitment to high quality engineering standards and software and AI and that type of stuff. And so much more. Then you look at different types of financials, the financials versus competition. Do they have enough cash to survive? Do they have enough cash to sustain themselves and reinvest? Understand as well if financials are backward looking. Look at PEG ratios, how much growth and how much profitability is in the future. Look at who is behind the company. So if you have a company and there's no institutional investors behind it, that's a bit of a red flag. We'll talk about one of those in a minute too. Check for insider selling. Make sure the insider management team is not selling all their bags. It's a very red flag. Ensure future revenue and earnings growth tied into S-curves. Analyst ratings, watch them, but most analysts really aren't very good. But it's still a good thing to watch on a time, especially their price targets. Check the news. Check the balance sheet strength. Can they survive a recession like we're in now? and check technical analysis when you want to get in, when you want to layer in and build a position, or use different tools like DCAS. And then you build your own valuation models and set your long-term goals of where you think this thing could go. And again, when you want to start taking profit. Is it a 2-year bag, like based on a crypto cycle? Or is it a 5-year bag based on a big trend like AI? That's what you need to determine. And how high do you think it'll go? You know, is Tesla going to go to $2,000 or $8,000? Or will it stay at $200? That's what you need to figure out. So that is the video, and it's all broken down there. That's how I do it. And it's very different how anybody else does it, but hope it helps. Next question is from Tricky Dingo. In a former post, you highlighted your covered call strategy you used when you got started investing in the 90s to generate income. What other strategies did you use in those early days to bring in enough income to cover the bills? So, very good question, Tricky Dingo. So, I tried to give this analogy a couple of weeks ago, and I think I kind of butchered it, but I'm not going to butcher it today. So, my focus is maniacal, and I tend to find one thing and optimize it. And I don't dabble in 10 different strategies. I do one thing and do it really, really well across whatever assets I'm playing with. So this is from Bruce Lee. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So for me, thank you, Dana, I am the guy that practices covered calls 10,000 times. Okay, well, over the last 35 years, yes. And then what I was doing is making money in the markets. I'd stock the money to the side and then buy rental properties. That's what I did with the profit. And the rental properties is what put bread on the table. And of course, profits from investing. So that's kind of how I did it. Now, there's a couple of things I do want to emphasize here as well. Again, my strength and weakness. Some people will call maniacal focus a weakness. I call it a strength. But it gives you deep expertise by concentrating on a single investment strategy. You develop a profound understanding and expertise in that area, and allowing you to make more informed and confident decisions, and skills like patience that I always preach as well. It also gives you consistency in results. I have had down to a science where I can do my trades on a 4 to 6 week basis with very consistent investment outcomes. And if there isn't an opportunity, I wait. If there's multiple opportunities, I get into them. And you refine your strategy over time and learn from past experiences. And then, of course, you make much better risk management, as we just covered in the very first question today. With that maniacal focus, you can better anticipate potential risks and challenges with your chosen strategy, allowing for more effective risk management and mitigation. And by the way, the focus goes way beyond just a strategy, but also the assets you look at. I look at very, very few. Actually, for somebody who watches the markets 24/7, 7 days a week, I look at a lot of assets, but that's kind of my job. But if it's not your full-time job, you can't look at more than 10 assets. So always remember that too. Be very focused on very winning assets. We'll talk more about that in a minute too. I didn't realize, but a lot of these questions, as usual, are dovetailing together. Next question. This is from Steve, H1. Hello, James. I'm 57 and have a portfolio across stocks, crypto, and real estate. So do I. I sold my company and now I plan to focus on selling cash-secured puts and covered calls. I'll be setting up a new brokerage account, 100% focused on this income-generating strategy. Which trading platforms would you recommend for the strategy and why? And which ones would you avoid? And I have listened to every one of your option videos. So thanks again for sharing your wisdom with the community. My pleasure. Tostevin, thank you so much as well for coming. And Doc Intern, good to see you, buddy. This is one thing I will say here is you don't need to do cash secured puts. You probably have good sizable wealth. Stick that in a brokerage account, get level 3 options authority, and they'll give you enough margin. So you could have a position in, say, Tesla, or a position in MicroStrategy or something, and you can use that to sell puts against. You don't need to use cash. Keep your cash. I always have cash and a lot of margin so I can take advantage of market opportunities when they arise. So first of all, these are a couple of the platforms that I would kind of recommend. I kind of don't endorse stuff, but Ameritrade was my go-to favorite, but they were required by Charles Schwab, so that's now Charles Schwab. And they got some pretty cool things. If you want to be a sophisticated options trader, that's probably the best, most secure platform that gives you all the features with very good margin capabilities and stuff like that. Also, Robinhood is very interesting and cool. I have that as well. Interactive Brokers, I heard, is very good too for advanced option traders due to its very low fees, wide range of products, but I found I could do more with, at least Ameritrade back in the day. E-Trade I never liked. Some people like it. I never liked it. It has a web-based platform and a mobile app like all the others, but I just never found the UI very good, but it works. And Webull is good as well for 2. But if I had to pick 3, it would be the top 3 there. And if I had to pick 2, it would be the top 2 there. Not financial advice. And hang out in the community and sell away. Put selling calls. Remember, it's real simple. The money is not in the buying. This is going to sound really crude. The money is in the selling. So focus, everybody, on selling. That's probably the big takeaway today. Don't focus on buying. Buying is the easy part. Selling is the hard part. Selling is where you make the money. Next question is from TJL. You are truly appreciated. Maybe a big ask. Could you do a retire on update for us? Buy and hold types. Maybe adding any more of your insights and wisdom. Thank you, sir. I will indeed. And Spat01. Thank you for all that you do. Could you please do an update to the retire on cocktail video? It's over 12 months ago. I can't believe that. I will do that. Yes. That's coming, I promise you. These videos are a lot of work, but again, thank you to the other development team. We have a new retire on model, which is multi-asset capable, so it makes us even easier to spin out these with more flexibility, like starting years, ending years, allocations, and tweaking everything in a much better way. So shout out to the team for that. Thank you, DJ. So yes, that'll be coming soon. Give me a week or 2 and I'll do an update. And I'm also always looking, by the way, for a new asset to add into the cocktail. But right now, the retire on cocktail could be a little bit more about hedging and risking and profit taking and reallocating as well. I will integrate that into the story too. Thank you for the question. Next question is from EW. James, you demonstrated a NOS-SOL pair trade example recently using NOS-USD and SOL-USD chart on the ATR model. I was under the impression that if you want to pair trade, the optimal indicator to use is pair trading on steroids, PTOS. Why did you demonstrate the ATR in this example? Well, this is, we always get this question, and thank you for saying it. First of all, to reiterate again, PTOS is for inverse correlated assets, like SOL 3x long and SOL 3x short. ATR is for trading pairs that are not inverse correlated, like NOS and SOL. So let's look at that and what that looks like right now on the ATR. Remember, the altcoins got hammered. So over the last 2 months or so, since July, you can see here, this is the NOS-SOL chart. When it goes down, that means Nosana is underperforming Solana. But still, even in a downward trend, there's ways of identifying tops. Now, the most important thing is when you see things in a downward trend and they continue in a downward trend, don't jump in until that trend reverses. Second of all, it looks like the NOS-SOL position, the trading position changed at around, what's that? 0.008 was the killer entry point. That's when you would have pivoted maybe some Solana into Nosana. And the trend has been up since there, but it looks like it's ready for a breather. So this is how we trade the pairs. Remember, toggle to deviation when you're trading pairs or currencies or commodities. It works much better than trend. Trend works much better for straight stocks, etc. So hope that helps. But remember, PTOS is for inverse correlated assets. And remember, if you are in a 3x asset, don't hold it for too long. Get in and out. Never more than 10 to 30 days. I'm going to flash out that rule again because it's so important. People still forget. This one, never hold leverage, ETFs, or perp contracts for more than 10 to 30 days. If you're not making your money in that time frame, get out. And if you are holding these things, have a stop loss. Big time have a stop loss for these. Next question. This is from Guy. Hey, James and team, could you review the best way to set up alarms in IADSS to see if there's new creative ways from the community? Is there a way to get an alert by phone call besides a text? Having a robust alarm system is just as important topic until James will approve use of more automated trading uses model. Thanks. So we do have a lot. We have another team that actually works full-time on alerts. So you know some of the names. But let's walk through very briefly, because a lot of people is probably too deep. But this is kind of the indicator alert setup view. It cannot give you a phone call, but I'm sure that's not too hard. However, who the hell answers the phone these days? But text message, email is all there as capable. So you have your alert triggered using a JSON to a webhook to AWS Lambda, etc., etc. I won't bore you with the details. The actual settings and the code is all here for those who want to take the time to understand exactly how it works in the back end. Also, the configuration is real simple. You set your settings. For example, if you're trading on the 1 minute or the 5 minute or whatever, your confluence, your trend model, etc., your mean reversion, you configure it all in the system. And if you want to learn more, go to Discourse, go to IADSS PushBullet. You'll see gurus in there like Mainstage News and Watson and a whole bunch of others that really specialize in this. So yes, it's all there. Phone calls, I don't think so, but text and email too should be good enough. And what I also do is I set a lot of alerts on my charts in TradingView. And I'm in front of the TradingView the whole time, so I get the little ping go off. Sometimes I'm streaming and the pings go off. One just went off a few minutes ago, but I won't distract myself and find out what that was for. Next question, Simply Complex. Simply Complex. The last question was Simply Complex. A big IA fan. So we hear a lot about Tesla share price going to the moon by 2030 and beyond, which as a shareholder is great. But nobody seems to be talking about the fact that if Optimus and robotaxis are as useful as some people may expect them to be, resulting in mass displacement and redundancy of human beings in the workforce, where is the liquidity coming from? And who is buying Tesla if 75% of the workforce is unemployed? Brilliant question, hard-hitting question, and we are aligned. I think a lot of people talk about a ubiquitous, abundant future. I don't see that happening at all. I see hard times coming ahead, and there will be a lot of displacement from AI and robotics. No ifs, ands, or buts over the next 5 to 6 years. That's definitely going to happen. And I hear a lot of other people talking about that yesterday. In fact, I referenced Uncle Fred in yesterday's video on exactly that. So that's why we stack Bitcoin, so we can prepare for the future. Now, let's look at a key question. You seem to be under the impression that retail investors are the ones buying stocks. Well, if you look at Google, it's 73% institutional owned, not retail. In fact, Tesla has one of the highest retail holdings, so about 47% compared to all other stocks. But that's just Google and institutions. And remember, there's a lot of insiders and employees that also own a big amount of stock too. Now, let's look at other groups around the world. I thought it was a very interesting statistic Sanjay shared with me today. And for our friends in Germany, this is a little bit of sad news. And this is just German statistics that popped on my radar today. This is from Nikolai. About 75% of Germans have no investment strategy. Many want to start their investing, but they don't know how to even get started. Most Germans are very conservative and defensive in their financial lives and largely don't know what to do. And there's a clear preference for low yield or even no yield options, such as call money accounts that was paying zero interest or even charging interest a couple of years back. And fixed term deposits or classic savings accounts are not going to get you ahead. So this is just an example of a huge country with people with a lot of money, and they sit on melting ice cubes, which is cash, or we call bar over there. And a major factor, besides the lack of knowledge, is that many Germans are unwilling to ask for advice. In just last year, only 1 in 5 Germans ever sought financial advice, less than 20% of the savers. And that's the problem. Now, there is some good news, though. Millennials and Gen Z are more informed, and they know they need to do something. They need to start investing early to combat poverty in old age. They see this happening already in the country, and they are motivated. And the proportion of people who save regularly among the two age groups are 44% and 47% who invest. And they invest in things like crypto. And they're going to do well, as long as they're in the right crypto, of course. So that's just another example of most stocks are held by institutions, and a lot of retail only hold cash and don't even invest at all, which is a crying shame, because that's why I make these videos, to help people find their life raft. Let's talk about the impact on stock as well. Now, I do believe mass automation will lead to significant unemployment, and the impact on Tesla's stock price and market liquidity isn't straightforward. It does depend on global economic policies, how societies adapt to automation, and how Tesla's ability to maintain or grow its market share in this robotic AI era. And the liquidity for Tesla stock may come from a combination of global investment, institutional investment, new economic models, policy interventions aimed at managing the transition to an automated economy, etc. But this scenario assumes a world where economic systems adapt to technological unemployment. And this is why a lot of people like myself believe UBI is on the cards for the future. But it's a plausible path. But I would not worry. When a company like Tesla makes a bot that costs $30,000 and generates $200,000 of value every year, or a robotaxi is able to be sold for $25,000 and generates $60,000 plus a year after expenses, it's a no-brainer. People with money will find a way to buy these things, okay? And as a result, people with money will also find a way to buy the stock. So I wouldn't worry about retail or people who are made redundant from AI and robotics. They're not the ones who would be buying the stocks in the first place. So I know that sounds really callous and cold, but it's also a reality. So don't worry about it. And the bots are coming. The bots are coming big time. Next question is from Hallie Dogman. Hallie Dogman. That's a cool name. James, an EV Tesla fan of Electric Viking down in Australia, says the new Chinese EV XPeng G6 is much better than the comparable Tesla. I realize Tesla value is dependent on the other business lines, but if a better Tesla EV company arises, won't that depress Tesla and give us even better entry? Or would it be a deal killer due to short-term sales damage? Or is it moot as Tesla has self-driving? You're on the money there. So first of all, shout out to Electric Viking in AU, Australia. I think that's what that means. But first of all, we've been here. The joke is the competition is coming, okay? The competition is coming. The SpaceX competition is coming. The Tesla EV competition is coming. Every car maker in the world, with the exception of the Chinese, are retracing right now. That's just a fact of life. Because they can't make EVs profitably. And they can't scale. And they don't have the gigafactories that do this, like what Tesla is focused on. And they don't have a software-based vehicle from the ground up where you can modify 400 different things from the same piece of code, whether it's adjusting a headlight or a dash or whatever. Nobody is there. Now, let's look at what Tesla is. Coincidentally, I shared this on Patreon yesterday. Tesla is 8 major lines of business: Dojo, FSD, Megapack, Autobidder, energy like Powerwalls and battery creation, Optimus Bot, automotive, including semi-trucks, robotaxis, insurance and charging, and so much more. And each one of these things either impacts one or two or more S-curves that are colliding, like AI, like energy storage, like automation, robotics. And it's just, there could not be a better positioned company. It's not a car company. XPeng is not going to threaten them. Let's look at XPeng. They don't have no FSD. They do have an ADAS system, which is a driver assistance system, called XNGP. But according to simply Wall Street, it is 118% overvalued. And that's kind of shocking when you take into account XPeng. So first of all, before I get into the chart for XPeng, is it a threat or not? According to Ray for Tesla, he says only 3 firms have a shot have a shot at autonomy. These three companies are Tesla, BIDU, and Huawei. All right? Because of the massive capital investment and compute required. Even if you had some of these Chinese firms with all the money in the world, they still can't access the compute because of certain restrictions, which we won't get into here at all because we're not a political show. But that's the problem. Now, even scarier, here is the XPeng chart on the ATR model. It is down 94% over the last couple of years. And that would qualify as a zombie. So yes, and this could be from a number of different factors like dilution, etc. But either way, no. XPeng is not the Tesla killer. Do not worry at all. Yeah, they might be able to make a one-off car that probably costs more than a Tesla, but it will not be as good as a Tesla. That's for sure. And can they make it at scale and profitably? Most probably not, because very few have been able to do that. In fact, BYD is the most performant competitor, and they make all their profit on hybrids, not even on EVs. So let's see. Next question. This one's a tricky one, but it's too involved to answer in great detail. But this is from Beanies. Hey, context. I'm 49, married, 3 children in the UK. Began crypto in September 2022. Not a bad time. Driven by frustration with traditional financial systems. Best investment, Solana. Bought 400 Solana at $7. Woohoo. So far, your gains are 43. Your portfolio is 43% Solana, 18% ETH, 15% XRP, 15% Bitcoin, 4.5% Cardano, and some other stuff. You also have stocks in your ISAs, Coinbase and Tesla. What should you do now? With global markets, you buy more Solana, get 1 Bitcoin, invest £1,000 in Toncoin, Near, ICP, Ondo, Render, Pith, etc. So first of all, I did talk about focus earlier, and you've got kind of a hodgepodge of things. I like the way you're in a little bit of disruption, like Tesla and Coinbase is good, and crypto, but some of the crypto things are questionable. I'm going to tackle some of those right now. And another question which dovetails into your question is from Play Lucky. Thank you, James, for all your hard work in these videos. I haven't missed a video in almost a year now, and last year you convinced me to reallocate my ETH position to Solana. One of the best financial decisions I've ever made. Happy you did it. So, and this goes back to the hope is not a strategy, and the profit taking and the rotation. Sometimes people have a hard time selling or giving up stuff. So let's talk about SOLETH from, was it Play Lucky? Yeah, Play Lucky. This is what SOLETH has done. Even with an ETH ETF, it's up 600% since the last year and a half. Stunning result. And yes, and that's including ETH doing very well, going up from $900 to $2,500, $3,000 or wherever it's at now. So that's the SOLETH chart. Also, Cardano had 500,000 daily active users in November 2021. Now it has 22,000 daily active users. And I know people are still believe in this chain and think it's great and Charles is great and they're coming out with a new hard fork and it's going to solve all worlds with dragon heads and stuff. No, it's not. Okay? Hope is not a strategy. This should tell you everything you need to know. I don't need to even show a chart on this because it's horrific. Like there used to be 4 Cardano per Solana. Now it's 430. Think about that. Also, XRP. This thing has been around for 8-9 years. Still terrible tokenomics. XRP valuation is $2 million and fully diluted market cap per daily active user. Solana's 41,000. Okay. This thing, I believe, is old tech, absolutely overvalued like Cardano. Doesn't deserve to be at this market cap at all. Now I know people that, oh, XRP is great. Cardano's great. Since the very first, I think my second video ever, third video, I can't remember, I slated them both. That's how bad and that was back in 2021, you know? Anyway, time to cut the losers. I won't tell you how to allocate, but I will tell you what you can do first. Step 1, kill the losers. And I get, out here being public and saying these words. These things are good, maybe to some people, but they're not a fast horse. And the technology has come a long way. Is it going to survive? Yeah, maybe. Is it going to do well? Not as well as other things. So you need to think about, just like play lucky, do something with your ETH. It's way too heavy a position. XRP, I have no idea why anybody would hold that thing. And I had no idea in 2021. I have no idea today. Cardano, again. But you're way too light in Bitcoin. 15% Bitcoin is not enough. So I'd find a way to beef that up. Also, Toncoin, there's been a lot of stories yesterday tied into Europe, France, freedom of speech, Telegram, etc. I was never a fan of Toncoin because of the tokenomics and the crypto compendium score. Also because of, I had believed, just like David Sachs believed, that once the US government shuts down TikTok, they'll probably go after Telegram next. And that's a political issue regarding freedom of speech. I'm not going to touch it, but that's why I never bought it. But it does have a lot of network effects. But I still believe you probably shouldn't invest in Ton. Near, maybe. Do I? Nope. ICP? Nope. Ondo? Never really looked at. Render? I have a little bit of Render. Pith I got out of before the big unlock. I haven't gotten back in yet. I missed it by a couple of cents when it went down to like 22 cents or something. I need to look at it again, but I think Pith is good, but they wouldn't be core positions. Again, I'm very focused on very, very few positions and spend a lot of time investing in them. I would definitely beef up your Bitcoin. I don't know what your Tesla allocation is. Get some of that too. And, you're still very young, 49, a lot younger than me. You can ride that wave for the next 5-10 years for your kids, and you'll be doing very well. So hope that helps. Next question is from Sir Canario. The first time you've posted, welcome to the community. James, did you analyze LMFA? What is your opinion? Price to book 0.2, Bitcoin HODL 130% of market cap and low debt. This is interesting. I had never heard of it till you posted it. Let's analyze. Again, doing a lot of stock analysis today. First of all, you're sort of true. The Bitcoin holdings for LMFA, it is LM Funding America is the name spelt out. They have, as of June 30th, 2024, they had 160.4 Bitcoins, which is now worth $10.265 million. And yes, their market cap is 9.04 million. It's a stunning situation where their Bitcoin HODL is worth more than the company. There was a time when Hot 8s, etc., were kind of in that similar situation too. But that's weird. And their debt, they did seem to pay off as well when I looked at their financials. But there are a couple of warnings on their financials. First of all, they make $6 million a year in revenue and pay out $18 million in stock-based compensation. I hate this. Any company that does this, I do not like. It's always been my strategy. Companies where executives line their own pockets, I find disgusting. Revenue per share, it's gone down. The Sloan ratio, very poor quality of earnings, bad. Also, insiders are selling. There were 6 insider sellers over the past 3 months. Not a huge amount, but still something to look at too. They've got a tiny market cap, 9 million, which is a tiny company. And they're unprofitable and forecasted to be unprofitable over the next 3 years. So it's nothing but badness right there. Let's look at the chart. This is LMFA going back to 2017. It's a total zombie. I mean, it's just straight down, dead. And would I touch it? No. Well, I wouldn't be able to anyway because it's too small. Because, a big buy would impact the price. But just because the HODL is worth more than the business when you take out debt and the future losses, and the big kicker for me is the stock-based compensation, leaves a bad taste in my mouth. I wouldn't touch. But thank you for bringing it to my attention. And favorite part of the week, this is Odom. He's an Indian sloth bear. It was taken from the wild and trained as a dancing bear. Odom was rescued in 2009 and now lives a happy life digging mud pits. Fun note, Julia Roberts named him Odom. So thank you as well, everybody, for helping. And tomorrow we have DCA Live. This will be a fun show. It'll be spicy. Mando is moderating, so you know it's going to be good. And don't forget to subscribe. I'm going to do some open questions now. That was a long story, but please, everybody, remember this. Leave your GTFs. Do not hold them for a long time. And remember this. Take your money off the table. $500,000. Instead of losing your 50,000, you actually lost $500,000. Okay? Profit taking, everybody. Profit taking. Remember poker. Critical. So, hope you enjoyed the show. Let me get some questions out there. And thank you to the 7,000 people watching live. I don't even know how long I've been going. 50 minutes. We'll make it happen. Bitcoin, $64,250. It's been very flat all weekend, which means somebody's stacking. Somebody's stacking. Every single dip is being bought up. Could pop tonight. Sometimes Sunday nights it pops. And thank you all, everybody, for your support. Doc Intern, a reminder to the IA family to stay healthy, to enjoy your health. Keep diet as pure as possible. Avoid excess sugars and processed food. Some fasting. Exercise regularly. And do not forget to donate regularly to good causes. Thank you, Doc Intern. You rock. And there was a cool little tip, actually, for people. I heard a year or two, maybe 3 years ago, try not to eat stuff with more than 4 ingredients. And number 2, if you can't identify what it is, don't eat it. Always. When you go to the store, make sure you can know what an apple is, or a banana, or an almond with some salt. But if it's got more than 4 ingredients, it's processed. Stay away. Anderson W., what Doc Intern said. Yes, health is wealth. That's the most important thing, everybody. Without it, there's nothing. There are no pockets in the shroud. Rusty Bot up there in Norway. Maybe you need a classic IT guy in your crew. We have hardcore coders, data scientists, and JavaScript. What else? Python coders and I forget the language. PineScript. The team had to learn PineScript, and we push it to the literal edges, which is awesome. Jimmy God, a few pennies for the animals and a new camera. Thank you so much. Yeah, it's not the camera's fault. Camera's fine. It's the software that runs the camera and integrates the streaming software. That's what craps up 1 every 100 times. Angle Blackson, just letting everyone know, Jupe has a governance vote. Yes, I voted yesterday on Jupe. Remember to vote if you hold Jupe. When you vote, you actually earn Jupiter. That'll be paid out, I think, in December or January. And Dog One, nothing but goodness. Can't wait for Q4. I know, Q4 is going to be fun, everybody. That's why we need to stay healthy, per Doc Intern and Anderson W. Don't eat anything you can't recognize. And don't eat at restaurants. Food's garbage. Garbage. Like when you go to an expensive store like Whole Foods, you know the restaurant you're eating at doesn't shop at Whole Foods. They shop at the garbage outlets. So remember that too. Let me see. Steven on PS4. I think that's a gaming console. I have IADSS, and so far pretty good. What's your favorite time frame for daily or swing trade on the assets? 4 hour, 4 hour, 4 hour. The most important time frame. I've been looking at time frames for 30 years. 4 hours is the best for identifying swing. It helps you confirm where the trend is going, and it helps you identify opportunities. So it's not too short. It's not too long. It's just perfect. So 4 hours is the way to go. When it comes to striking to get into a trade, I zoom into the 1 hour, and then the 15 or 5 minute. And the 5 minute tells me exactly when to strike once everything has been confirmed on the 4 hour. The Great Escape. Will FSD work in other motor brands that have the same level of sensory hardware? This is a very good question. So there's 3 companies now talking to Tesla about licensing their FSD software, but it'll take them 2 or 3 years to learn how to build the computer and sensor suite and camera suite into their car. The car will have to be designed around the camera and sensor suite. You can't just take a car, stick a computer board in there, and then stick some cameras on the side. It doesn't work that way. Everything has to be built around the software, including the whole sensor suite. And that's why unless you're a Chinese maker, They're the only companies that can spin things up really fast, like a mega factory. They could probably do it in a year to 18 months, but if you give it to a German car maker like BMW or Volkswagen, it'll take them 3 years before they can integrate this suite around a car. And for American car makers, probably 4 years. So that's the way I view the world. Reina, thank you for what you do in team. Thank you so much for being here, Reina, up there in Canada. And thank you, long-term holder, Signal 103, David S., Anjo, Dema, and Tosteven. Appreciate you all for coming. Remember, profit taking is going to be big. That thing is coming out actually next week. And sweet users will get it first. And literally, I can guarantee you, you'll never regret taking profits. Maybe 1% of the time, 5% of the time, but most of the time you won't. And remember, the other thing about taking profits too is when you sell something, you can stick it somewhere else. So watch how high it's gone. Is it going to continue? Nothing goes up forever. You know that. So thanks all for coming and have a great day, everybody. Great evening. And thank you as well to TNT Tesla and American Beijing'er and Sean Donnelly and K8 and everybody out there in the chat. Appreciate you all. See you tomorrow morning at DCA. Bye-bye.